Thank you so much for joining us today. A quick introduction and some framing from my end before we get started. My name is Kayla Economo, and I am an organizer with the Polluters Pay Hawaii Coalition. We are a statewide coalition that is dedicated to protecting Hawaii residents from climate-driven insurance rate hikes. We work to advance economic justice through policies that keep insurance affordable and available in Hawaii. And today we're here to talk about Senate Bill 1166 and what it could mean for Hawaii residents struggling with skyrocketing insurance premiums. As we know, home insurance in Hawaii is getting more and more expensive and harder to secure, and that's not a coincidence. It's the direct consequence of climate-driven extreme weather disasters. Right now, Hawaii families are the ones that are absorbing the cost of climate change. They're seeing it through their skyrocketing insurance premiums. They're seeing it through drop policies. They're seeing it through damage to their homes, all while large oil and gas companies that are most responsible for this crisis pay absolutely nothing. We saw this unfortunately play out after the devastating Maui wildfires in 2023, where insurance costs spiked and families who had already lost everything found themselves uninsured or uninsurable. And we're seeing it again this year with the recent Konolo storms that happened this past month, which brought historic flooding across the islands. And as someone who grew up and currently resides on the North Shore of Oahu, this issue hits close to home as many friends, family, and neighbors are still actively recovering from back-to-back flooding. Senate Bill 1166 is a direct response to this crisis. It gives states and insurers the legal tools to hold the companies most responsible for these climate disasters accountable instead of passing that tab onto everyday people in Hawaii, which is what currently is happening. Today, we have an incredible group of voices and experts to walk you through why this legislation matters and what it means for Hawaii. And before we get started, a few housekeeping items. We'll have time for Q&A after all speakers have presented at the very end. If you do have a question, please use the raise hand function, and we will unmute you and call on you when it's your turn. You're also welcome to use the Q&A chat when it's time. And then please hold all questions until the end again. With that, we have Senator Keohokalole as our first speaker today. Senator, we are so thrilled to have you, and the floor is yours.
Thank you. Aloha and good morning, everyone. Well, good morning if you're in Hawaii. Happy to be here. The Konolo events that we just experienced in March, and actually on the windward side in my district, we had a historic rain event just 2 weeks before that got lost in the news after the devastating flooding on the North Shore. I think these events are just an example of the challenges that we're seeing across the state and around the world with the increasing frequency and intensity of weather events and the hardship that that's placing on communities. And then specifically in Hawaii, as it relates to insurance. As Kayla said, in the last several years since the Maui wildfires devastated Lahaina and upcountry Maui in 2023, obtaining affordable homeowners insurance or even getting access to insurance has grown increasingly challenging in Hawaii. Last year, we passed significant insurance industry rescue legislation that restarted our hurricane fund to allow access for condominiums to even obtain hurricane insurance in Hawaii because it was so difficult to obtain it, and also to provide financing for our insurer of last resort to be able to expand out its capacity to take on more policyholders. And so we're in a real tough spot here in Hawaii. We're seeing more and more storms. They're having dramatic impact in the community, and it's making it very difficult for homeowners to be able to obtain insurance. And for us to continue to be an attractive place for insurers to come in and provide policies. And so the measure that we've introduced and we will open conference committee negotiations on today creates a right of action for insurers in the event that there is another catastrophic climate-induced disaster in Hawaii to go back and hold the entities that were knowingly responsible for creating this mess accountable so that our homeowners, our property owners, and our taxpayers are not going to be the only ones left trying to clean up the damage that comes with greater and greater frequency and with just greater and greater damage to the people of Hawaii. So that's basically what's going on. Thank you for being on here.
Thank you, Senator. Next up, we have Kaliko Okalani, if she's able to join us off mic as well. She is a youth plaintiff from the 2022 landmark Navahine lawsuit, and we're really excited to have her today. One moment as we get her
Aloha, can you
going.
guys hear me? I'm so sorry. I'm like having the worst technical difficulties right now, but I'm
Yes,
gonna prop
you're
up the
coming in
song
great.
because I am skipping class. Hi guys. Okay, I'll start. Mai ka pino kalai hae hae ai ka nau po'oana ma ka mole olua lehua aloha mai kako. My name is Kaliko Kalani. I am from the west side of Maui, and I am a sophomore at Lahainaluna High School, and I'm currently cutting class to show my strong support for Bill SB 1166 SD2 HD2. A little backstory. Ever since I was 5 years old, I've been advocating for climate justice, natural resources, harmful construction, anything I could do to protect our fragile environment, including serving as a plaintiff in Hawaii's youth climate case to eliminate carbon emissions from our transportation system. And I feel compelled to do this because I don't want any other child to experience the devastating effects of climate change that I've experienced. So, in 2018, a tropical storm named Olivia hit Maui. It was a regular storm that was made much worse by the mismanagement of our county water department and the compounding effects of climate change. My family's home was washed away in a flash flood, and we were stranded. I really wish this bill had come sooner, so my family and I could get back on our feet immediately. And that is why I'm making my statement today. This bill helps hold companies who cause climate chaos accountable for the harms they cause, and I will use my experience again and again to ensure a safe future for the world's youth. So mahalo for listening. Let's pass Bill SB 1166 SD2 HD2. Mahalo.
Thank you so much, Kaliko, for making the time today. And sorry you had to skip class. Appreciate your enthusiasm and support. I will pass it off to Tyler Cruz, Senior Campaigner at the Insurance Fairness Project now.
Thanks, Kayla. Let me share my screen real quick. Um, yeah, so I appreciate the opportunity to present some of our findings. First, a quick note on what the Insurance Fairness Project is. So we're a network of survivors, experts, and advocates working together to develop and deliver community-centered solutions to the home insurance crisis and conditions driving it. So last week, we published a report looking at the status of home insurance in Hawaii using publicly available data. You'll be able to find the whole report on our website, and I'm just going to go over some of the top lines now. So the first thing we looked at were the costs of some of the more prominent events in the state over the past few years. So the Maui fires had an estimated 5.5 billion in total damages. Insurance paid out just over 3 billion in claims. The Kona Lowe's has an estimated 2 billion in total damages. The insurance data isn't yet available, but as you can see in the wildfires, there's a nearly $2.5 billion gap between estimated total damages and what was paid out by insurance claims. So what happens with non-insured damages, that cost is normally shouldered directly by property owners, or in the case of public infrastructure, it's generally comes down to the taxpayers. And then to put some of these numbers, because 5 billion is a crazy amount of money, into context, the Hawaii Department of Education's operating budget for fiscal year 2024 to 25 was approximately 2.18 billion. So we can't understate just how much money this is that we're talking about that is being directly impacted. Um, I took this quote from the Hawaii Mesonet director. He gave it to Hawaii Public Radio shortly after the Kona lows, and it says, even if we're getting drier on average over time, which we seem to be doing, we can have these bigger extremes than we've had in the past. And that is consistent with how we think the atmosphere is changing due to climate change. So this quote really speaks to the shifting risk profile within the state, and the need for us to really think long term about how we're addressing both the physical risks as well as the financial risks to residents. Unfortunately, so far, a lot of the risk is being absorbed by residents through things like higher insurance premiums, or if properties are deemed too risky, they'll get a non-renewal letter and have to navigate a pretty stressful situation. Um, so just going over these numbers, home insurance increased between 32 and 54% over the past year. Only 4.2% of properties in Hawaii have flood insurance, and non-renewals for insurance policies increased nearly 216% from 2018 to 2023. Quick note about flood insurance, we are going to get new flood maps soon, so those numbers will likely change. But flood insurance isn't free. So if people are required to get flood insurance, that is an additional cost that they'll need to start bearing. Um, and then I pulled this directly from page 15 of the DCCA's interim report that they submitted to the legislature in December. And I think it's a good summary of what a lot of people on this call are working to accomplish. So it says, legislative clarification or reform may be necessary to establish a fair framework that balances insurer recovery rights with insured protections. By understanding and addressing the consequences of this decision, Hawaii can better support a stable and functional home insurance market. So I'll end with this. So insurance is risk-based. And as climate change increases the risks, we need to both address how we mitigate and prevent damages while also making sure that the whole cost isn't shifted to residents, especially as so many of us are already living paycheck to paycheck. Um, Personally, I was born and raised in Elele on the west side of Kauai, and I was a kid when Iniki hit. So I remember my dad going out and helping our neighbors fix their roofs and stuff like that. And the resiliency of Hawaii's people always shows up when times get tough. But really, what we're advocating for, I think, is we need to give people some help and level the playing field. And companies that are worsening these risks or causing these risks should be contributing to the recovery and mitigation efforts. Um, so I appreciate all the work from the folks on this call, and thanks again for letting me present.
Mahalo, Tyler. Thank you so much for sharing those stats that really illustrate the problem at hand and for your personal connection to this work as well. A quick reminder, when we get to the end of all the speakers' comments, feel free again to raise your hand and we'll unmute you for Q&A section time. And now I'll pass it off to Richard Walsgrove, who is a professor at the UH Richardson School of Law, also a director for the environmental work there as well. And Richard, the floor is yours.
Thank you, Kayla, and thank you to all of the prior speakers for helping us to understand what this is all about. Particularly, thank you to Keohokalole for reminding us why it matters so much. I'd like mostly to use my 2 minutes to complain about my own insurance non-renewals over the last 2 years. I also learned this year, for example, that State Farm is declining to insure rental homes that are single wall rental homes. That reminds me, it's not just about homeowners, right? That we're all affected by this. But I won't do that. I won't complain for the next 2 minutes. Instead, I've been asked to describe a little bit about how the bill works alongside other legal efforts to hold oil companies accountable here in Hawaii. As most of you know, Maui, Honolulu, and the state have each filed lawsuits involving consumer deception claims leveraged against oil companies. The main difference between those lawsuits and this bill is that those lawsuits deal with damage that has happened to public infrastructure, whereas this bill really helps the private citizens, all of us here, for example, deal with these issues. But other than that difference, the legal premise upon which, or the legal tools upon which the bill is based, are actually very similar to some of these other efforts. Now, the lawsuits I mentioned are based on a set of documents that have come to light that show that oil companies, the oil industry overall, knew about the dangers of climate change more than half a century ago. There are lots of documents. It'd be fun to go through all of them. One striking example is that in the 80s and 90s, the industry started to change the way it designed its own oil platforms to deal with things like rising sea levels and more intense storms. But the consumer protection lawsuits alleged that while all of that was happening, and while the oil companies knew about these dangers, they were hiding those dangers from the public and planting seeds of doubt about climate science and ultimately slowing the transition to safer forms of energy. So the lawsuits seek to hold a set of oil companies accountable for that sort of climate deception. And I think that we can trust local judges and juries to dig through those complicated lawsuits and to really find the truth. But sitting here in April of 2026, my faith in that process, I have to admit, is a bit shaken. And it's shaken because there are powerful forces in Washington, D.C. that don't want those lawsuits to see the light of day. The Trump Department of Justice, for example, filed its own lawsuit before Hawaii even filed a lawsuit, trying to block the state entirely from seeking that accountability. That failed, thankfully. Senator Ted Cruz today is pushing a bill in Congress that would basically make oil companies or shield oil companies from climate deception or consumer protection laws in all 50 states. So the bottom line is that these lawsuits, these other efforts that have been happening in Hawaii are powerful, they're important, they're at risk, and we just can't rely on those lawsuits nor the federal government to address the types of problems that Tyler described to us. So that's what makes this bill, SB 1166, so useful as part of a state law toolbox that really goes right at a problem we are facing today in Hawaii. And I'll finish by saying that the bill rests on just two very common and sensible legal principles. The first is the idea that states are allowed to regulate consumer deception. And so that was the point of describing to you some of those documents earlier. The second sensible idea baked into this bill is that we call it the polluter pays principle. It's the idea that polluters should pay for the damage they cause. And so by blending together these two ideas, it's basically just adding another way in which the state can protect its residents. And it's doing it in a way that seems to me to be eminently sensible. And we're not inventing anything new. We're just trying to we're just trying to tread water, actually, is what we're trying to do. So thanks for allowing me that opportunity to describe a bit. I'm happy to answer questions, and I will hand it back to Kayla.
Thank you so much, Richard. Next up, we have Josh Stambro, who served as the Chief Resilience Officer for the City and County of Honolulu when the city's case was filed against fossil fuel companies for climate damages. Josh, floor is yours.
Mahalo, Kayla. Richard, I empathize with you. I think this issue is personal and it's hitting home, and it's totally appropriate for us to talk about. My insurance rates have risen 60% over the last 2 years. My mom in Hilo had a non-renewal. She couldn't, her insurance company pulled out and she had to pay twice as much to get replacement insurance. So this is something that, it's not just a scattered, sort of experience for folks. It's happening all over. And that's why Senate Bill 1166 is so appropriate and timely. This is also personal on the work front. I work for an organization called Hawaiian Council, which has jumped in to support recovery both at Lahaina and with the Kona low storms, providing assistance and aid to community. And one of the big things that we're hearing more and more is around the inadequacy of insurance to cover the losses, but also the rates going up as a result, especially for folks trying to get back into their homes in Lahaina. So, we saw 2 trillion gallons of water fall in the Kona low storms. These are historic, unprecedented numbers, and that is because of the influence of climate change. And when I was at the city and we filed the case in 2020, it makes sense. Like the city and the counties and the state have infrastructure all over the islands. And so when we had these rain bombs in 2019 and we had these huge shoreline erosion issues, those were hitting the infrastructure of the city because the city covered the entire island. And so it sort of sensed those damages first. And now we're at a stage where these damages are starting to become more granular and really spread through, private, smaller households and incomes in areas where it's being picked up. So this is a logical extension, I think, by the state legislature to move beyond just the obvious authorized protection of public infrastructure and then try to protect, personal property, personal insurers that are now suffering those same losses. So what Senate Bill 1166 really does is it clarifies that these claims payments made on climate disasters can be recovered in court from responsible parties. This is an area where, clearly the state has authorization to do that for its own, assets and liabilities. But as we see these insurance rates rise, it helps clarify that space. And it provides, flexibility as well to aggregate those insurance payouts for climate disasters. In certain cases, you can kind of go after each individual home or each individual loss or each individual policy payout. But in these large, huge hits that we're seeing now, these disasters that cover thousands of properties and are affecting thousands of folks, aggregating those and being able to sort of identify that as a loss is really more appropriate. And so that helps. And then finally, I think Senate Bill 1166 really lays out that there's this joint strict several liability standard that clarifies and makes clear to the insurers that are paying out and to everybody that they have standing to go to court here in state and try to make sure that the folks that are the most responsible for this pay. So, as somebody who served at the city before, and it was clear that we needed to protect ourselves and our taxpayers against the sort of unfair costs that were being borne that the fossil fuel companies had foisted on us. This is really an appreciated next step to try to protect and extend that protection to individual households. Thanks.
Mahalo, Josh. Our final speaker for today is Isla Shortstein, a political director at the Center for Climate Integrity. Isla, all yours.
Thanks so much, Kayla, and thanks to the rest of the speakers. I want to build off a little bit about from what both Richard and Josh were saying, and really just kind of get at this question of why big oil? Why hold them accountable for the crisis that we're in? And big oil, this is an industry that is uniquely responsible for the crisis that we find ourselves in. It's only the fossil fuel industry that has known and lied about this crisis for decades, effectively stalling an entire generation's worth of progress that we could have made to stave off the worst effects of climate change that we're now experiencing. And now communities are paying the price, and few places are, of course, feeling it more directly than in Hawaii. Everyday people are paying more for home insurance every year. And as the financial toll of climate disasters pile up, we're just seeing those costs rise more and more. We cannot solve the insurance affordability crisis without solving the root cause of the problem. Fossil fuel-driven climate crisis that's making weather more frequent, more severe, more expensive, and more deadly. This just goes to show that the oil industry is, of course, desperate to avoid a public conversation about its direct contribution to this growing crisis in our country, because they are currently paying nothing while everyone else foots the bill. And this bill is really popular. There was a recent poll where the vast majority, of voters in Hawaii supported the bill, and 72% of those voters want their state to do more to address rising insurance costs. So lots of widespread support. But the oil industry has fought really hard against this and a previous version of this bill. The American Petroleum Institute, which is the trade industry front group association for the oil and gas industry, hadn't had much of a presence in Honolulu until this year. And this is just making it really clear that this industry is really concerned that any attempt to make them pay their fair share of these rising insurance costs tied to climate is a dangerous idea in their perspective, and they just want to squash it before it could ever take off. When a mega disaster like the wildfires in Maui or Los Angeles happens, everybody ends up paying for it except for the oil companies that are turning much of the world into a tinderbox. We need to equip the state and insurers with every tool available to protect people from these rising costs by ensuring that the oil companies are held accountable for their role in this problem. I'll turn it back to you, Kayla.